In this video, I'll be covering what is the best way you can invest in gold, whether you are investing via cash, CPF or SRS. As a bonus, I've compiled all this info into this super detailed spreadsheet, which you can download for free, link down below, yeah? And without further ado, let's jump right in. The first way you can invest in gold is via exchange-traded funds or exchange-traded commodities. This is the simplest and fastest way you can buy gold, since you can easily buy and sell whenever you want. However, since they are funds, there will be a recurring expense ratio of anywhere between 0.09% to 0.4%. And since you don't own the gold directly, there will be counterparty risk, as you are relying on the custodian to hold and manage the gold on your behalf. Though, rest assured that all the ETFs and ETCs here are backed by 100% real gold. The gold is stored at gold vaults, which are inspected regularly to ensure transparency and safety. Now, there are several options to choose from. Which one should you go for? A good starting point is to look at where the fund is domiciled at. That's because the fund's domicile can have different tax implications, especially if you are non-US resident. But wait, gold doesn't pay dividends, right? So why should I even care about the domicile? Yes, gold doesn't pay dividends, which would be funny if they did. Imagine a gold bar giving birth to tiny little gold babies. However, fund domicile still matters because of estate tax. That's because if you are a non-US investor and you hold US domicile ETF, when one day you touch wood pass away, your US investments could be subject to up to 40% estate tax. Oh, sorry, not your investments, it's your descendants' investments now. So, to avoid these costly scenarios, non-US residents may want to consider Ireland domicile options instead, which are generally not subjected to US estate tax. For this, there are two ETCs that you can choose from, IGLN and SGLD. Both of them have the same 0.12% expense ratio and have around the same $20 billion total net assets. However, IGLN's higher trading volume makes it the better choice, as it will offer tighter bid-ask spreads as compared to SGLD. And if you are wondering which is the best broker to invest in this, the answer will likely be Interactive Brokers. IBKR lets you trade on the UK exchange for just $1.70 and on US exchanges for just 35 cents. Plus, their currency conversion rates are very close to what you see on Google, making them one of the most cost-effective brokers out there. So, if you have not opened an IBKR account yet, you can sign up using my link down below. That said, there are still some situations where you might want to go for US domiciled gold ETFs instead. First, if you are from the US, then you can just stick to the US ETFs. For this, IAUM would be the better choice, since it has an even lower 0.09% expense ratio. However, if your purpose of owning gold isn't to invest them over the long term, but mainly for trading purposes, GLD would be the better choice. That's because it has the highest average trading volume, while also allowing you to trade options on it. Otherwise, if you are looking to invest in gold via SRS or CPF money, then you can go for GSD, which is listed on the SGX exchange. However, its expense ratio is on the high side at 0.4%, and it has a relatively low average trading volume of just 10,000. This could result in wider bid-ask spreads, making trades slightly less cost-effective. However, if you don't mind that, you can invest in GSD via POEMS or FSM1. POEMS charges a 0.08% trading fee, while FSM1 charges a flat $3.80 fee. This means if you are investing less than $475, POEMS would be the cheaper choice. Otherwise, if you are investing more than that, FSM1 would be cheaper. However, if you set up a regular savings plan to invest in GSD through FSM1, you can even invest with zero transaction fees, though third-party fees like exchange fees will still apply, of course. Moving on, the second way you can invest in gold is through gold savings accounts. In Singapore, the two main options are the OCBC Precious Metals account and the UOB Gold Savings account. With the OCBC Precious Metals account, you are not investing in actual gold itself, but rather what's known as paper gold. And while the term paper gold might sound a little paper-ish, rest assured that it's still a legitimate way to gain exposure to gold price movements. The benefit of investing into paper gold is that since there's no physical gold, you won't be incurring any recurring fee. OCBC Precious Metals accounts also doesn't charge any transaction fee. So the only cost you will have is the bid-ask spread. According to several sources, OCBC Precious Metals accounts has a bid-ask spread of around 1% each way. Meanwhile, with UOB Gold Savings accounts, you will be investing into actual physical gold itself. However, it will also mean that there will be a monthly service charge of 0.25% per annum, subject to a monthly minimum charge of 0.12 grams of gold, subject to GST charges also. While While the fee sounds high, at the time of recording, the UOB Gold Savings Account has a lower spread of around 0.4% each way, and it also comes with two benefits. One, you can convert your gold savings account holdings into actual physical gold itself, though there will be a conversion premium of $100 for every 100 gram of gold converted. Two, you can also use your CPF funds to purchase gold via UOB. And from my understanding, you can even use your CPF funds to purchase physical gold and take it home with you. Though, just before you think you have found a hack of emptying out your CPF money by buying physical gold, just know that you can invest at most 10% of your investable CPF savings into gold. Last but not least, the third way of investing into gold is to buy actual physical gold. Owning physical gold comes with its own set of challenges. First, you will need to find a way to keep your gold safe, whether it's in a Milo tin at home or a safety deposit box at the bank. Additionally, buying physical gold will usually come with higher transaction fees, and it's not as liquid as the other investment options. That said, some gold investors still prefer to invest into actual physical gold as it allows them to avoid counterparty risk while at the same time fondling the gold while they sleep. So, if you really want to buy physical gold, there are several reputable websites that you can check out. The most well-known one is Bullion Star. Here, you will be able to buy all kinds of gold, such as gold bars, gold coins, and even gold accessories. Besides Bullion Star, there are also other options such as Gold Silver Central, Indigo Precious Metals, and silverbullion.sg. All of them offer gold at slightly different prices, so it's best to compare the prices before making your purchase, since gold is still gold no matter where you buy them. For example, at the time of recording, Bullion Star is selling 100 grams of gold bars for as little as $14,028, while on Indigo Precious Metals, the price is a little cheaper at $14,003. So that was a quick comparison between some of the most popular ways you can invest in gold. Hopefully this helps you out. Like, share and subscribe as I'll be posting new videos every week.